Hello, I'm Andy Agathangelo, the founder of the Transparency Task Force. Thank you very much indeed for wanting to watch this video. But just before it starts, here's a short but important message. It really does take a lot of time and money to produce our events, the videos, and all the campaigning work that we do. So if you're not already a subscription member, please do become one. That's really important. You'll find all the details you need through the link that you can see on the screen now. And if for any reason you're unable to become a subscription member, please at least make a donation. You'll see the link for our donations page coming up on the screen now. And just in case you need them, the links to both of those pages are in the video description. Thank you very much. Good evening, everybody. My name is Andy Agathangelo. I'm the founder of the Transparency Task Force. The Transparency Task Force is a certified social enterprise. We have a formal mission statement, and that formal mission statement is to promote ongoing reform of the financial services sector so that it serves society better. I'm obviously aware that virtually all of you are here tonight because you are mortgage prisoners. Unfortunately, the kind of issues that you've been facing as mortgage prisoners are not in any way, shape or form unique to yourselves. There are many other individuals who have been on the short end of good conduct by the financial sector and the regulators and frankly the politicians for many, many years. There are all kinds of scam victims, people, for example, who have suffered as a consequence of regulatory failure in relation to Blackmore Bond or Woodford or Premier FX or LCNF or Connaught, and there's a long, long list. People who've literally lost life-changing amounts of money. And these are individuals who are very frustrated and very angry, and in particular they're angry with the establishment for not protecting their interests. They feel like they've been let down, and they have been let down. So we're an organisation that is campaigning for people like that, and of course people like yourselves, the mortgage prisoners. In your case, you already have a very, very good campaign organisation of your own, UK Mortgage Prisoners, who we are very pleased to be running this, our third Mortgage Prisoners event with. I'm going to share my screen just to show you some information. You may or may not have already seen it. If you have, forgive me showing it to you again, but we do have quite a few people with us today who are here for the very, very first time. And I do want you to sort of see and understand the bigger picture here. What you're looking at is a database called Violation Tracker UK. Violation Tracker UK is a database that shows the violations by different companies against various different organisations. And the first thing I'm going to show you is the industry totals. The industry totals. So we go to this and we click on other summaries, as I'm doing now. And you can see here where it says parent industry totals. I'm going to click on that, parent industry totals. And what you'll see is a long list of the different industries and how much they've been fined. And you'll see, I'm sure, that the financial services industry is at the very top of that list. That should not be the case. The financial industry should be the most, or at least one of the most, trustworthy industries in our economy. And I say that for good reason. I say that because the financial sector has to be trustworthy for it to function successfully. So the first serious and important point is that there is obviously something seriously wrong with the way the financial services sector as a whole conducts itself. If it weren't the case, they would not be the top of that naughty list. Not only are they at the very top of it, you'll see the amount. They are roughly, well, over 3 times worse in terms of size of fines compared to the second industry, which is aerospace and military contracting. The third industry is telecommunications. The fourth industry is utilities and power generation. And the story gets worse because if you click on the word financial services, as I'm about to do now, it will take you to the worst offending companies. First of all, NatWest, then Barclays, then Lloyds, then UBS, JP Morgan Chase, etc. They're the 10 worst offending companies. And then you've got a list of the individual fines ranked by how big they are. So the very top is a fine that was brought against Credit Suisse in 2021. If you look at the agency column, it shows FCA, that's the Financial Conduct Authority. I'm sure you know that anyway. And the amount's £292,209,276. These are enormous figures. And then we've got Barclays, then NatWest, and all these other organizations. Where it starts to get really worrying is when you scroll down the page and you start to see a pattern. The very same organizations being fined for doing the same kind of thing over and over again. And the word we use to describe that is recidivism. Recidivism is where an individual or an organization carries on misbehaving even though they've been caught and fined, prosecuted, or whatever it might be. Why am I explaining this? I'm explaining this because I really do want you all to understand, if you don't understand already, that the mortgage prisoners issue is symptomatic of a wider problem in terms of the way the financial sector operates. And those are the kind of issues that we at the Transparency Task Force are working hard, we'd like to think, to try to do something about these issues. And that was a very, very long page. You'll see there's page 1, 2, 3, 4, and so on and so forth. There are many, many pages of those violations. And one of the issues with that approach, the approach of fine an organization that's doing something wrong, is that if all you're doing is finding the individuals who are doing something wrong, effectively all that's happening is that you are finding the shareholders. The shareholders of those organizations are, of course, essentially completely innocent. But if you then leave the individuals responsible for the bad conduct alone, if you don't do anything about them, the pattern will just carry on repeating itself. And that is precisely what we are seeing. But by the way, right now, the Parliament in the UK is looking at various changes to legislation. Now that we're out of Brexit, the government has an opportunity to rewrite the Financial Services Rulebook. So the Financial Services and Markets Bill is working its way through Parliament. And one of the pretty intelligent bits of legislation and regulation is something called the Senior Managers Certification Regime. And believe it or not, there are forces at work in the system on behalf of the industry that are trying to water down and dilute that kind of consumer protection. Consumers in the UK are exposed to very, very high degrees of risk through scams and scandals, and frankly, the kind of things that led to the mortgage prisoners situation that we are here to talk about tonight. Later on in the session, time permitting, I'm going to be playing you a short part, just a few minutes, of a podcast where Jonathan Glenn, the former Economic Secretary to the Treasury, makes a few comments that I think help to explain everything that's going on in relation to the mortgage prisoners problem and, frankly, many other financial services issues that are plaguing the UK right now. But I'll play that bit later. What we're going to do next is play you a short video. It's just 6 or 7 minutes or so in relation to some of the developments in the mortgage market. Videos being produced especially for this session. I hope I'm going to be able to share my screen properly and show it. Share sound. And after that, we'll have a bit of a Q&A and a bit of a discussion about what's carried off in the video. So, Rachel, could I invite you to take yourself off mute very, very shortly and just tell a little bit about the person who's actually made this video for us, so everybody's got a bit of a context before I press the play button. Thank you, Rachel.
Yeah, so Andrew Montlake is a key speaker on mortgages in the industry. He runs and owns a company, a big mortgage broker called Coreco. And on Twitter, he's called Monty. He's always been really supportive of mortgage prisoners and actually tries to help individuals that he sees, you know, in mortgage prisoner problems if they comment on things on Twitter. So he's a big supporter of us.
Thanks, Rachel. That's perfect. Thank you very much. I'm going to press play. It lasts for several minutes. Please try to absorb the key points being made. I do hope you find it interesting. It's obviously not a great big razzmatazz video. It's just been produced especially for tonight's session. But I do hope you find it useful, and then we'll have a bit of a discussion afterwards. Okay, folks? Thank you.
Hi everyone, and apologies I can't be with you this evening. Where to start is the hardest part when reflecting upon the last few weeks since the previous Chancellor's not so mini budget. In that short space of time and after all hell broke loose in the markets, we seem to finally be in an atmosphere of calm, which we are all grateful for. The markets have been chastened, for now at least, but the cost for this has been the biggest political U-turn of all time, another new Prime Minister, and the fundamental destruction of Trussonomics as we know it, as well as a hefty bill. This wholly unnecessary and self-inflicted devastation caused all of us in the industry and everyone with a mortgage intense worry, and actually gave us all a glimpse into the world of the mortgage prisoner and the worry and issues that many of you have faced for a long time. The cost of borrowing for lenders, and therefore the funding of mortgages, has increased drastically in recent months as a result of economic influences. Russia's decision to invade Ukraine, the energy crisis, the need to curb inflation, and the recent mini-budget announcement are all amongst many factors having a knock-on impact and forced lenders to price not for excess profit, but in many cases to avoid losses. Daily increases in swap rates of 30 basis points are not unusual at the moment, but following the Chancellor's mini-budget, we saw a daily rise of 100 basis points, 1%. And to put it simply, bank base rate went up by 2.15% in the last 12 months, from 0.1% to 2.25%, but 2-year swap rates in that period, which drive funding costs for fixed rate mortgages, went up by 5.1%, peaking on the 26th of September. At higher interest rates, many more than usual will likely fail the affordability checks, which means likely sticking with their own lenders, possibly costlier products, or moving on to standard variable rates. Now, luckily, the markets have reacted well since Sunak and Hunt took over, with gilt yields falling and the pound rising once more, and swap rates have fallen. They've actually fallen by around 1% once more, but the damage has left scars that are not easily healed. While some lenders have begun to put their rates down again, it is highly unlikely they will fall too quickly due to current market conditions and the lender's desire to preserve service levels after recent application volumes. They almost certainly will not go back to the levels they were. And we do have another Bank of England base rate move in the coming days. And whilst this may not be the 1% plus some were worrying about now, another 0.5 or 0.75% is likely, causing further angst to people who are exposed and not on fixed rates. It does now seem that interest rates are in general headed for a new normal of around about the 3.5% to 4% level, rather than the 6% feared a couple of weeks ago. The issue with all of this is how much it showed that the UK is exposed to short and medium term interest rate risk. And it banged home the issue once more that mortgage prisoners have, most of whom do not have the luxury of at least being protected by the relative security of a fixed rate. It also starkly showed that we've failed to address the issue. We faced this dark issue only recently. The mortgage prisoners have lived with this for over a decade. As a mortgage broker, I'm proud of our community who want so much to help, but feel helpless too. I've also spoken to many lenders who do want to help, but feel unable to because of a whole range of different factors. And the problem we now have, of course, is that rates have moved up. And so whilst for many prisoners it may not be a case of now getting lower rates, it will be a relief to at least be able to get a fixed rate protection, or at least know you're with a lender with a track record of looking after its customers rather than treating them as assets. I still feel, as I've said previously, the answer lies with the government. As Martin Lewis reportedly said, while the government chose to bail out the banks in the financial crisis, it has never bailed out the bank's customers who are victims of that collapse. And I still ask, if the government can introduce schemes such as Help to Buy or to underwrite lenders on what is deemed to be a higher risk, low deposit mortgage, then why can't they offer the same indemnity for lenders to move mortgage prisoners onto better rates, especially if they have a good track record for repaying their mortgage in the past? Surely that makes them less of a risk. And we now have term interest only and retirement interest only products available. Can these products be adapted for use together with a government guarantee to the lender? Or can they produce a government capped rate scheme whereby over a certain amount the government picks up the difference on the loan, maybe in return for an equity share, a Help to Buy? Or thinking massively outside the box, with the government in need of social housing, could they buy negative equity properties with non-bank lenders as a one-off at the level of the loan? Potentially rent them back at an affordable rent? I know it's out there. And what government needs to avoid is precedent, where everyone from now calls for something similar when things go wrong. But I think this can be avoided. This is a one-off situation which needs a clear one-off solution. I really hope something is done before the next issue comes, and to at least relieve the pain of so many and avoid the creation of any more mortgage prisoners ever.
Okay, I do hope that was useful to those of you that have thoughts about next steps on the mortgage situation. Well, we're going to open up for comments and questions now. So I'm going to go to what we call gallery view, so I can see everybody in little sort of thumbnails. Wave an arm either literally or digitally if you have a question or comment that you want to put to us now, and we'll do our best to deal with that. And after this this Q&A, we're going to be going to Dominic Linley for his thoughts about a very important initiative, which I'm going to wholeheartedly support. So I can see we've got Jacqueline's got her hand up. Thank you, Jacqueline, and also Manda. Let's go to Jacqueline first, then we'll go to Manda. So Jacqueline, if you don't mind, please take yourself off mute. If you're happy to, Jacqueline, please introduce yourself and then share with us the point that you'd like to make. We really do want this to be as inclusive a session as we possibly can, folks. So I hope you are all happy to, engage and converse in some way. So Jacqueline, take yourself off mute, please. Introduce yourself, then share your thought. Thank you.
Hi, thank you, Andy. My name's Jacqueline Lelis. I have recently rejoined the industry and become an IFA.
Okay.
The FCA are holding consumer duty seminars. I attended one of them, and today was the retail banking seminar on consumer duty, which I missed, unfortunately, but I will catch up on. Does anyone have any opinion, as it's tougher than treating customers fairly? Does anyone have any opinion as to, will it make a difference? Because after all, as a mortgage prisoner, which I am too, when I borrowed, rates were subsidized, in fact, so low that the profits they've been making at 4 and 5% have been, in my view, massive. So they can't use the excuse. I understand in a way if they're borrowing now and lending now, but how can they use that as treating customers fairly or being under the new consumer rules? It seems totally the opposite. But nobody seems to be bringing this up at all. Due to my profession, I have to be very careful how much I can now say on Twitter and so forth, because we are checked. We're the little guys. We can't afford to get anything wrong because we can't afford to be sued. Whereas the banks, the building societies can, after all, if they make bad lending decisions and they get fined 10 million, they don't care if they've made 20, they've got a sheer profit margin. So where do we stand there? Because it seems as though the FCA are making it tougher and tougher. Certainly I'm always full of compliance work, but only tougher for the smaller people, not for the big guys.
Jacqueline, if you don't mind, I'm gonna chip in with my thoughts first of all, then we'll open it up, because you've actually, I think you've taken things to the heart of the matter here. You see, to my mind, the mortgage prisoner situation just doesn't make any sense at all, because the entire financial services industry is pretty heavily regulated. I became an advisor myself, Jacqueline, in 1986, yeah, just before it was regulated. So the first regulators were, Loutro, the PIA, so on and so forth. I'm going back some time.
I was in 81.
Okay.
And it's only because I'm a mortgage prisoner, I had to come out of my job.
Got it.
So it's actually cost me my entire career.
I understand. I get it.
And I recently rejoined, thankfully, due to Rachel Neal and Mortgage Prisoners Group, assisting me, helping me to fight on, as it were, rather than give up.
Yeah. I get it. My point, and if you don't mind me all speaking bluntly here.
Oh no, of course.
There is something massively wrong right now, because the entire financial services sector is supposed to behave in an honest, ethical, transparent, caring way, treating customers fairly. Now we have this consumer duty, etc., and it's all about making sure the ordinary consumer, the ordinary citizen, the ordinary mortgage holder is treated properly. But here what we've got is a situation where meltdown in the financial markets, the global financial crisis leads to massive decisions being made behind closed doors, in the Treasury, in Whitehall, in government, in the boardrooms of great big banks about what to do. We need to refinance our balance sheets. We need to do this. We need to do that. We need to be bailed out. If we won't get bailed out, there's going to be riots in the streets. We're too big to fail, and all that sort of stuff. It all went on. It all really did go on. And then in plain English, what happens is decisions are made to sell the books of ordinary mortgage borrowers, you guys. with absolutely no proper due diligence being done about what's going to happen to these mortgage prisoners, with all kinds of reassurances that yes, they'll be able to remortgage, and yes, they'll be able to do this, and yes, they'll be able to do that. None of it should have been allowed. It's so wrong. It's so wrong on so many levels.
But it's
And I know
continuing.
that you all, know that, and that's why I'm kind of freaking out a little bit that you're putting a very intelligent point to us about, will things like the consumer duty make a difference? They bleeding well ought to, but they won't if powerful forces in the industry and in government don't actually care enough about what really happens to ordinary people. Jacqueline, we'll go back to you for your comments on that, and then of course we'd welcome any other points from people that want to share their views as well. Jacqueline, what do you think? What do you really think?
I don't think we've got anyone in government that is strong enough to go against the majority. And we're not the majority, because I don't know the precise numbers, but I keep hearing 200,000. But unfortunately, it's not just those books that have been sold, because I'm with an active lender.
Right.
My specific book has been sold, and I'm being quite honest here, it's a common knowledge. My clients too know this, that I got into arrears for reasons I won't bore you with tonight. However, to get out of those arrears, you're not allowed to practice. And I kept telling my lender, give me time, I will get back there. But they wouldn't hear of it. And then suddenly I was barred from low rates and everything else. I've been a prisoner since 2008. Now, is there anyone that actually will champion us? Because do we need a celebrity? Do we need somebody? Because if you can target government enough. Now I know Rachel and her team tried very hard and they lobbied, but again, a lot of people in the group are disabled, have various conditions, don't have enough money to travel up and down to London to support, and if you're older, you can't stand out there in the rain for hours. It needs some sort of real attention, bringing attention to the government, and it has been brought there, but not forcefully enough yet, obviously.
To my mind, Jacqueline, I think the amount of campaigning that's been done on behalf of mortgage business has been awesome. You know, you've got an all-party parliamentary group, you've got Martin Lewis, you've got loads of people all doing exactly the right things. Your cases, to my mind, should have been dealt with years ago. You know, the amount of public support for what's been going on is fantastic. But this is the key point. I'm gonna stick my neck out and say it. There is something seriously wrong with the way our democracy works, that natural justice is not being done on behalf of the mortgage prisoners. And it may well quite literally come down to just a small number of people with huge power and influence in government and in the Treasury who are stopping what should happen. We're going to hear from Manda now, and then we're going to go to Nicholas Wilson. Manda, please take yourself off mute and share with us the thought that you'd like to make. Thank you, Manda.
Hi, can you hear me okay?
Yes, indeed. Thank you.
Thank you. I think Jackie just raised a really important point there, that we are all getting older. You know, we've been mortgage prisoners for so long now, and that even extends to the
term.
The type of situation where, you know, let me just give you an example, because we're paying so much more. I mean, I'm paying 6.39% on my mortgage now. You know, that's a figure that many people are sort of fearful of. And, you know, we've been paying so much over the top for so long. So when the house starts to deteriorate and you need new windows, or you even need to decorate, it's finding the extra cash, but also, obviously, the cheap way of doing it is to try and do things yourself. And as we're all getting older, that becomes harder. So, you know, I think that is a really valid point that needs to be raised, that this pool of mortgage prisoners are no longer in their youth. But what I wanted to raise and to ask was, how bad with the current cost of living crisis, how bad is it actually anticipated that it's going to get? I mean, I'm fearful of what's happening on Wednesday with the next Bank of England rate rise increase. Absolutely fearful of it. And, you know, I'm fortunate I'm on a repayment mortgage. I really feel for the guys that aren't on repayment mortgage and are on interest only. You know, at least my capital is coming down more now. But, you know, are there any thoughts as to just how high and how quickly these mortgage rate increases are going to get? That was my point. Thank you.
Thank you, Amanda. Thank you very, very much indeed. Please, please wave a hand if you want to come in specifically in relation to what Amanda has just been speaking about. I think I'll just share my own brief thoughts, Amanda. I mean, the reality is that there's no kind of control or predictability about the world's financial ecosystem right now. It does seem to me to be in a really perilous state. There's been so much money pumped into the economy through quantitative easing that we've got inflationary pressures. The response to inflationary pressures is to ramp up the rates of interest. That's bad for everybody, but of course for you guys and girls, it's accentuated many times over. And the fundamental point here is things are not being dealt with in a fair way. If they were being dealt with in a fair way, there wouldn't be the scale of the problem that we have now. Thank you, Amanda. We're going to go to hear from Nicholas Wilson in just a second. Now, most of you are quite new to TTF and our community. Most of you won't know Nicholas Wilson. I've just put something in the chat you can have a quick look at whilst Nicholas is talking or afterwards. And by the way, we will circulate what's in the chat afterwards. You've got access to the details as well. And we are also recording tonight's session. But Nicholas Wilson, I'm happy to say this quite directly. He is an absolutely amazing human being who's achieved so much for the benefit of others, frankly, at his own expense. To elaborate on that, please have a read of the link I just put in the chat. Nicholas, I'm really pleased you're here, sir, because you can relate to the kind of life experience that these folk have been going through to one degree or another. Nicholas, please share your point. Thank you.
Thanks for those kind words, Andy. Well, yeah, I'm a mortgage prisoner. And also, I mean, this was not going to be my point, but Rachel knows, and I've made it public on Twitter. I've just been diagnosed with stage 3 cancer, prostate cancer. But I'm also in arrears with my mortgage because of as all of us, our payments are going up every month, and my payments are now more than my benefits. The payments I have to find to pay my mortgage are more than I receive in benefits. But the question I have was, does anybody know if we can find out, and Dominic might know the answer to this, how much these companies, say Heliodor, paid for our mortgages? Because wouldn't it be equitable for us to pay, if they pay £20 in the pound, wouldn't it be fair for us to pay the interest on that 20 pence in the pound rather than 100% that they're claiming from us? I mean, to me, that would seem they wouldn't make a loss. We would be able to pay our mortgages, and it would be equitable. I mean, they would still make money. They would still profit from it. And if there's any way we could find out, it would also be very useful as a negotiating tactic if we were ever in a position to move away from our current supplier, knowing how much they actually paid for our mortgage. But so I put that out as a question, really.
Nicholas, first of all, thank you for sharing your sad news. I'm really sorry to hear that. I'm really obviously very sorry to hear that. You raise an extremely important point. Does anybody know if any freedom of information requests have ever gone in relation to how much the books were bought for? There's been so much opacity about the whole thing, hasn't there? So much behind closed doors, so much secrecy, so much mystery, so much non-disclosure. Does anybody happen to know if anything about that, or if there have ever been any attempts to get to that information? I think that's Rachel coming in. Rachel, yeah.
Right, yeah. From different types of conversations that we've had, we have applied quite a few times through the Information Act and always been denied, and said that it's commercially sensitive, of course it is, and we were never actually allowed to be told Dominic may know more than me. The other I remember, because the mortgages got split up and then split up again, and we know what the government roughly were paid for them, but we've never been able to grasp exactly how many books that was for, and how they were essentially split up. But like I say, we've tried. Also, Morris in the group, he got very close. They even opened an investigation up, because they wouldn't allow us to understand what was paid for our mortgages. So it's all still shrouded in a lot of secrecy. It's also it's always, we've asked a number of times, and I believe Harper's Parker have asked a number of times as well.
Thank you, Rachel, and thank you, Nicholas, for your point. Would anybody else like to come in at this stage with anything else? Any other comments or questions? Wave literally or digitally, if you know how to do it. Ian Tyler, you put a comment in the chat about interest rates. You know a lot about these sorts of things. Ian, would you be happy just to elaborate on what you put in the chat, just to give your sense of, where we're at?
All I'm saying there is the basic facts that, you know, today, as we sit here today, the bank rate is 2.25. I tend to agree with the guy, I didn't catch his name, but the video guy, Monty or whatever.
Monty, yeah.
That at some stage, maybe next year, rates will get to around 4, you know, so if maybe slightly less if we're lucky, but they could get up to about 4. And in that scenario, that's a rise of 1.75. So those people who've got a mortgage that's linked to, you know, a variable rate essentially can reasonably expect that that will be the increase, you know, of 1.75. I mean, if we're lucky, it could be a little less, but it's that's the order of magnitude. And to be clear, that is the main driver of that is the inflation, which is a function of COVID and Ukraine and things like that. So, you know, that's the reason why we've got these interest rates rising. Yeah.
Thank you.
Yeah.
I'm going to ask Rachel a question. Rachel, there's a bit in all this that I find particularly mysterious. Okay, my understanding is that when the books were sold, various commitments were made. Could you just help me and everyone else understand as much as you can about what your understanding was of what was agreed at the time, and whether what was agreed turned out to be reality? Because I think that's the nub of the matter. Thanks, Rachel.
So we obviously seen letters that were produced where the government were going back and forth. Lord McFall received some letters where there were promises that the people that were going to be buying our books from, well, Cerberus, would obtain lending licenses. Therefore, although they made a commitment not to change our terms and conditions essentially for 12 months, the mortgage is a 25-year life. So therefore, you know, 12 months is a snapshot anyway of what we were promised. But also they were given an assurance that there would be a lending license in place. Therefore, they would be able to offer products. We would be treated like we was when we took out our mortgages with a high street bank. So, you know, at that point in time, if that would have continued, then we wouldn't have essentially then been stuck with these zombie books, zombie companies where they can't do anything with us or other than collect our mortgage essentially like a debt collector. So my argument has always been, when we've spoken to any government, John Glenn, anybody within government, that the protections were not followed up and put in place. Therefore, they were allowed to get away with not obtaining a lending license, and a protection for 12 months on a 25-year mortgage was inadequate anyway. So it was just poor from the outset, but they've always said that they did what they did because they needed to raise as much funds as what they could. Our other argument, of course, with it is that we believe that it should have gone out to market and not to hedge funds. And they said that they did go out to market, but there was no takers because that is where we were seen as risky loans. We were not risky loans just because they crashed the economy. You know, we were then seen as risky loans as almost the blame factor for that crash. The crash was down to the people running the banks, and you know, the government's behind them. So we've been blamed from the outset. You know, we've been blamed from day one, and then used as an excuse to be able to be sold off and kept on these high interest loans. Dominic may know more again about it, but you know, we have seen various letters, and we have brought it up many times within Parliament.
Thank you, Rachel. Thank you very much indeed. We're going to hear from Bri Burnett. Forgive me if I've mispronounced your first name, Bri, but please do share your thought. You said in the chat you'd like to come back to what Nicholas was talking about. Bri, please introduce yourself and share your thoughts. Thank you.
Hello. Yes, you pronounced my name. Can you hear me okay? Because I've got headphones on, so I can't hear. Great.
Yeah.
So I'm used to seeing Rachel's face now because of all the messages that she puts on the hi Rachel on the group on Facebook, and thank you very much to everyone on there for all that they do. It sort of sometimes fills me with hope and sometimes with horror. But just to come back to what Nicholas was talking about, and Amanda too, I think that a lot of people now, you know, we've been doing this quite a long time as a mortgage prisoner, and we're getting on a bit. And there are lots of people that are disabled, and there are problems like, you know, lack of income coming in. So my story, I'd just like to share and see if anyone else can relate to this, and to give Nicholas some support, is that I too have been a mortgage prisoner since 2009. I was very pleased when I thought I'd have the opportunity late 2019 that I'd be able to fit into the category of mortgage prisoner and go off with a clean bill of health, with my credit rating, having been up to date with my mortgage payments, to be able to remortgage. And then the big C came, which for me wasn't COVID, it was cancer. So being on chemotherapy, I accepted the 6 months, you know, to get a breather from my mortgage. Went into hospital for 2 weeks with pancreatic cancer, and stayed in the Royal Marsden for almost 8 months, having had 2 major operations, which has disabled me, chemotherapy, PRR, everything that's been thrown at me. I came out, so I went in the August of 2020 and came out in the April 2021. And what's happened since then, I'm with Heliodor. They gave me some leeway. I've paid something every month. I'm now in quite a lot of debt. I've had 4 complaints of the way they've treated me upheld with their 50 quid, you know, each time. And I've now written to the financial ombudsman to say about the way that I've not been treated like a vulnerable person. I came out in the April. I was then diagnosed with liver metastasis, so I'm now in stage 4. I'm in palliative care. It can't be cured, but it can be treated. I can tell you, when I go to bed at night, and I know this can happen to all of us, I feel that cancer is fairer than being a mortgage prisoner, because it would just pick on everyone. It doesn't care what age you are, who you are. It would just, at least it would just take out whoever it wants to. Whereas with being a mortgage prisoner, we're just targeted. It's so unfair. And I would like to live out the rest of my days in my home that I've lived in for 20 years. And so I applied for support for mortgage interest. I thought, well, that will be useful. I don't care if I borrow it because they can sell my property. Ha! Well, that's the biggest joke going, isn't it? As you'll all know, because that's at 2.9%. It doesn't help us. Although they have put up your borrowing rate from 0.8% to borrow this amount to 1.29, something like that. Now, I think I'm talking off the top of my head. So for someone like many of you, I'm sure, that we've actually took out mortgages because we were taxpayers, we now get no help when we need them as we're advancing in age with illnesses. I think it's an absolute disgrace. And when I go to bed at night, I don't worry about having cancer. I'm dealing with that. I take what comes, and I have. What I worry about and wake up in the middle of the night about is the roof over my head. And I'm sure so many of you do. And I have spoken to my MP. Well, not a face-to-face, I didn't get given that. And I'm now using every bit of energy I can to get on top of as much as I can to support the group. Rachel, I'm here. I'm trying to, and I think because of my backstory, I've now got hopefully someone from the Times interviewing me in a couple of weeks' time. But I really would like to highlight, because I think the mortgage prisoner situation is going to take us a little while to resolve. I don't know if I have time for that. So I'm trying to really fight the SMI. And I wonder if Nicholas could give me any hope or thoughts on his views with the support for mortgage interest, and how he feels about that.
Before we hear from
Yeah.
Bri, just before we hear from Nicholas, Bri,
Yeah.
thank you so much for so candidly sharing what you have shared. I don't know about anybody else, has made me feel particularly emotional, and to hear somebody say that it's being a mortgage prisoner is more unfair than having cancer is just as impactful as it can possibly be. It really is, Bri. Thank you for being you and for sharing with us what you have. I'm virtually speechless, and that doesn't really happen very often.
It's the first time I've told anyone this in a group, and I don't think Rachel knows my story because I've not shared it with the group, but I wanted to, so that Nicholas has a chance to maybe share some advice or views on this. So thank you all for listening.
Thank you, Bri. Thank you very, very, very much. Nicholas, would you like to respond to that?
Well, I just say how sorry I am to hear Bri's story. I mean, I was only diagnosed 2 weeks ago, and as you probably know, for prostate cancer, there's a fairly good recovery rate. So, I'm 75% hopeful they can cure it. But I'm so sorry to hear your situation. But as far as mortgage help is concerned, it's as you pointed out, it's fairly useless because they only pay up to about 2%. And at the beginning of February this year, I get some donations from my supporters on Twitter, which has helped me up until now. And in February of this year, I had to find £200 odd over and above the amount of the support for mortgage interest from the benefits. But as you point out, it's a loan, and I owe them £14,000, which is attached to this house. So I have to repay it if I sell the house or whatever. But since the rates have gone up, the support for mortgage interest rate doesn't go up. They don't pay you anymore. But I've had to find over £400 a month now. So it's doubled. The amount I've had to pay has doubled since February. And it's going to go up again, as everybody says, on Thursday. And it'll go up again and again. And my position is hopeless. I was encouraged, you said you got some support from Heliodor, because I need to go back to them and get some relief, because I'll be going through radiotherapy soon. But I'm afraid that support for mortgage interest is pretty, and I don't know if you know, but there's only about 30,000 people took it up because it's such a rip-off. And I took it up because I wanted to keep my home, but it's not a very attractive offer. I think Dominic probably knows more about it than most people, but it's not an attractive deal at all. But good luck to you.
Thank you, Nicholas, and thank you, Bri. Would anybody else like to comment at this point? I'm just going to go to gallery view so I can see all of you in little pictures. Just wave a hand if you want to come in. Princess Ariel, and then we'll go to Gurk Samra. Princess Ariel, please introduce yourself, then we'll go to Gurk. Thank you. You'll need to take yourself off mute for me. Thank you very much.
Can you hear me?
Perfectly well. We can hear and see you.
Hello, everyone. Oh, I'm in tears here, or I was. This is so sad, and I totally get how it's affecting everybody. It's stress, and it breaks down your body and your immune system, and it makes you more prone to serious illness. And I've got issues as well, but I won't go into that. I've just got one quick thing, really. It's just a bit difficult to word it, so I've made some notes, and it's basically that I've still got all of my original paperwork from Northern Rock, the original survey, the original mortgage offer, all the details, and it was basically a fixed offer. I took it out in 2007, and it was fixed until somewhere in 2008. It was about a 9-10 month fix, as I recall. So after that, it was supposed to revert to Northern Rock's variable rate, which it did until Northern Rock went bust. But at the point that all this selling on of our mortgages to loan sharks went on, it was supposed to be variable. So it was supposed to go up or down according to the variable rates. And what happened to me and to everyone else is that while they passed on the increases, they never passed on the cuts. So when all the variable rates came down, the Bank of England went down and the variable rates came down, we didn't get those cuts passed on to us. And I'm sorry if this was all mentioned at the beginning, because I missed the beginning of the meeting because I got in a little bit late. But is that not illegal? Is that not against the terms of the whole thing? Because if we signed up to a mortgage that was supposed to revert to the variable rate and therefore go up or down according to the variable rate, how could they sell those mortgages onto a company who didn't pass on the cuts and set their own variable rate to whatever they want it to be, but still pass on all the increases? And this is, I just can't get my head around this. So I just wondered, I imagine a lot of people are in that situation, but what are your thoughts on that? Have I made sense?
You have made perfectly clear sense. Rachel, do you want to respond to that? And we'll see if anybody else has any comments, and then we'll be shortly passing on to Dominic Linden. Thank you, Rachel. Thank you, Princess Ariel.
Thank you.
Hi. Yeah, it is an argument that we continue to have. We ask questions.
Yeah, I thought it might be.
You know, it's not. I can't sit here and say, well, this is why, because it's an unfair. There is no answer to it, because they skirt around everything that we ask them. Today we've received another copy and paste letter from Andrew Griffiths, who's turning out to be as bad as John Glenn in his copy and paste responses. If it could get any worse, it has done. So I haven't got an answer for you other than they honestly do not, they just skirt around the situation and the answer to any questions that we ask them, that being one of them. I had a very similar experience with my Northern Rock mortgage, and it all comes down to, again, why we weren't given the original terms and conditions that we signed up to, and that is basis of the argument, and that is the argument that we've took to Parliament many times, and we're always told we were given the same terms and conditions for 12 months, but we weren't.
No, we weren't. No, definitely not.
Can I,
without sounding like a conspiracy theorist kind of person, I think there's something being seriously covered up here. That's the only way I can compute the whole thing. I'm sure there's something seriously wrong here, because it's just so grotesquely unfair. A lot of people have made a lot of money off the back of mortgage business in one way or another. I think somebody wants to come in. Who is it?
Yeah, it's Ian. Let me
Ian,
say,
please do.
Firstly, when at the end of your fixed term you switch to their variable rate, the truth is, if they had been still active at that stage, they would have made you a number of offers, because actually nobody stays on the standard variable rate, because that's almost like a penal rate. So the first truth is you'd have actually been better off than the Northern Rock standard variable rate. The second problem you have is, whilst it's absolutely immoral what they did, that when, as you say, after Lehman's collapse, base rate was moved down radically, because legally their managed rate is an administered rate. That means it's set by the lender themselves. It's entirely their discretion. So actually, I don't think it's illegal that they didn't pass any rate decreases down. It's clearly highly immoral. And if you've been with an active bank, they would have passed much of the decrease on. Actually, to be fair, even the other banks didn't pass the full decrease on. They widened the margin over bank rate significantly themselves. So they didn't pass it all on. But clearly not to pass any on just shows you that it just says to me they're taking the piss, to be honest. So yeah. Sorry, the last thing wasn't very technical, but we
got the gist, Ian. We know you well enough to know that's okay. To my mind, clearly, even if it was just about technically legal, the regulators should have absolutely stomped on it from happening, because treating customers fairly. This is abusive exploitation of the financial
But the problem
sector.
is they're not regulated. That's the fundamental problem, because they were never had a banking license. They were a non-bank, so they were
And-
not regulated.
And
So-
for that reason, the deal should not have been done, because
Correct.
innocent
Correct.
people were put in the line of fire. It's like letting a 4-year-old cross a bloody, excuse my language, cross a main road.
Agreed.
Yes, it's the 4-year-old that's crossing the road, but come on, this is crazy. This is
and
crazy.
that's why the failure of Cerberus to get a banking license goes to the heart of this. Exactly.
It does. I'm absolutely in agreement with you. Stephen McGowan's put his hand up. We're going to go to Mr. McGowan, then we're going to go to Dominic Lindley, who many of you know, and we're particularly appreciative that Dominic's here tonight. Mr. McGowan, please introduce yourself and share your thoughts, sir. Thank you.
Yeah, Steve McGowan, welcome everybody. Just my point is, can you hear me? Everybody hear me? Yeah. Going back to 2006 when I took my mortgage out, 2007 Northern Rock, I believe I was missold that mortgage, because at the time I was going through a very sticky divorce. I needed stability for my children and myself. And I walked into the Northern Rock office and said, how much can I have on my mortgage? And they said, how much do you want? Do we know? It wasn't, and so I said the question is how much can I have? How much do you want? We can make it fixed for you. So I ended up with my mortgage and the Together, the dreaded Together product. Yeah, 125% of value. Part of it unfixed. So back then, I believe I was missold that product by Northern Rock. Absolutely. Yeah. And I don't know about anybody else's thoughts on it, but it's a bit like conspiracy theory. It was totally unregulated back then, back in 2006, and it's no wonder that the market crashed at the time. Well, that's my theory around it.
Yeah. Thank you very much indeed, Mr. McGowan. Thank you. We're going to hear from Dominic Lindley now. Dominic's going to be talking about an idea that we really all want to get behind and support. Dominic, please take yourself off mute. Thank you so much for being here. Your views and your insights and your expertise and your competence and your knowledge is really respected by a lot of people, including many in TTF. Dominic, over to you. Thank you.
Great. Can you hear me, Andy?
Yes, we can.
Yeah,
Perfectly
okay.
well. Yeah.
Great. Well, yeah, thanks everyone for attending and sharing your stories. I mean, I'm really sorry about the situation you'll find yourselves in. And of course, thanks Rachel and all the volunteers at UK Mortgage Prisoners. And of course, Andy and the Transparency Task Force for organising. So I'm currently helping out the APPG on Mortgage Prisoners, which is chaired by Seema Malhotra MP and Lord Sharkey. So I'm just going to touch on a few things. I'm going to cover what happened since 2021, which was the last time we tried to amend parliamentary legislation, and how that's impacted on mortgage prisoners. And I think firstly, it's clear that, as predicted by many, the interventions that have been made so far by the FCA and the Treasury have only helped a tiny number of mortgage prisoners, switch away. The FCA did change the rules, but I think everyone predicted at the time it wasn't going to help many people, and it's helped even fewer than even those kind of low expectations. And of course, as we know, and you're all experiencing, the SVRs are being increased pretty much every month. So I'm going to talk about that, and then I'm going to provide an update of the activity of the APPG on the next kind of Financial Services and Markets Bill, and how you can ask your MP to support a kind of proposed amendment to cap SVRs and to ensure that mortgage prisoners can access fixed rates. I mean, I won't go too much over the story because you all know it, but I can answer any questions. Most of you took out your mortgage with Northern Rock, and then you were kept trapped on the standard variable rate, and then sold on to kind of Cerberus, Tulip, and Heliodor. And of course, each of those sales had different sort of conditions which were imposed, but the fundamental bottom line is they didn't actually protect you against being mistreated. So of course, when Lord McFall wrote to the government back in 2016 and was told that, when people were sold to Cerberus, they would get the option of new deals, extra lending, and fixed rates should become available. Then of course the mortgages were sold, and all of a sudden Cerberus doesn't want to offer these things, and no one does anything about it. And the margins on the Northern Rock mortgages were kind of increased and then kept high. So, before the financial crisis, the SVR was around 2% over base rate. And since 2009, it's been, around 4.2 over base rate. And when the government sold on the mortgage, it gave some buyers complete discretion on the interest rate policy after 12 months. Then, John Glenn started to make much kind of positive about how some of the later packages, the SVR was tied to a basket of the 15 largest lenders SVRs, but of course it only was required to be kept at the level of the third highest amongst the 15 SVRs, so it didn't actually provide any protection. So of course that's the key message you want to get across to your MP, that the way the government sold off your mortgages made the problem worse and meant you were stuck with people who didn't have to treat you fairly or offer you new deals or fixed rates. We did get those changes to the affordability test back in 2019, which were supposed to help some mortgage prisoners switch, but we know there's been very low take-up of those. And when the FCA kind of ran the numbers and published it in November 2021, of around the 200,000 mortgage prisoners that we know about, only around 2,200 have been able to switch, and only 200 of those have been directly helped as a result of the changes. And of course, the other point from the FCA's data is that the vast majority of mortgage prisoners which are paying higher interest rates are in that position because they're being sold by the Treasury and UK Asset Resolution. So there are some mortgage prisoners who are paying low rates and got lifetime base rate trackers, but actually the vast majority of them who are paying high rates are in that position because they were sold by the Treasury and UK Asset Resolution. And of course, everyone knows now these interventions have only helped a small number of mortgage prisoners. So they haven't helped, and the situation's being made worse every month due to interest rate increases. I've been monitoring some of the SVRs at Landmark and Heliodor, and then also interested in other people's experience with SVRs of people like Tulip and Grasmere, because it's hard to get public data on how they've increased. But Landmark's put up their SVR to around, I think 6.39% is the latest increase, and it'll probably go up again after the Bank of England increases rates. And of course, as some of you have said, it wasn't cut when the base rate was cut around the financial crisis, but of course they're now being increased. So I think when the base rate was last around this level, the Northern Rock SVR was around 5.3, and of course now it's kind of 6.3 at Landmark. And it's always, again, frustrating when people at the Treasury and the FCA make comparisons by comparing the kind of SVRs paid by mortgage prisoners with the SVRs and some of the active lenders, because we know that very few people are on the SVRs, active lenders, for any length of time. And if you're not in arrears, you can normally access a new deal or a kind of fixed rate, which will give you some certainty over your mortgage payment. And we know that kind of 75% of borrowers in the active market move off the SVR within 6 months as they're able to access a new deal. But of course, as many of you know, you've been on the high SVR for 10 years and it seems to go up all the time. So the Financial Services and Markets Bill is currently in the Commons at what's called committee stage. It'll be debated there before heading to the House of Lords. And for those who remember, the last time in 2021, the Lords supported a cap on SVRs, but then this was defeated in the Commons. So we're going to be proposing an amendment again, and the amendment would cap SVRs. And the proposal at the moment was 2% above base rate, similar to the margins on the SVRs which existed prior to the financial crisis. And then the second part of the amendment would require all inactive lenders to offer mortgage prisoners fixed rates. So how you can help, we've prepared a draft letter to send to the new Economic Secretary to the Treasury, and we need as many MPs as possible to sign this letter. I think Rachel and Andy have now got copies of it, so they can hopefully share it after this event. And if you could all email your MPs and ask them to email appgmortgageprisoners@gmail.com. This is all on the letter, on the draft letter, to add their support to the letter. And again, if you could do this as soon as possible, and please feel free to include all of the really heartrending details of your own cases when you email them, your MP. And of course, make sure that you mention that the harm's being caused to you directly by how the government kind of sold off your mortgage. And we're particularly interested in people who are in constituencies of the backbench Conservative MPs to contact their MPs. And so we're going to be, if you could all email your MPs and then ask them to support the letter, and then we'll send it to Andrew Griffith. And then as the kind of bill winds its way through Parliament and the Lords, the amendments will be debated first and then probably voted on later at the kind of appropriate time. So that's what we're trying to do next. I know that the help hasn't come soon enough for many people, and it's a source of great frustration to me that the kind of excuses put forward by the FCA and to a certain extent the Treasury for inaction kind of keep changing. But the excuses, how we need to kind of wait and see, how mortgage prisoners are not overpaying, by putting forward kind of distorted numbers about comparing it to the SVRs. The excuses are kind of still being made, but we're going to try our best. So that's what we're doing. I'll just leave you with 2 bits of good news. I'm sorry they only affect a small number of mortgage prisoners with certain lenders, but in the summer the Co-op Bank went to the High Court to try and stop the Financial Ombudsman from looking at interest rate rises in one of its kind of subsidiaries called Mortgage Agency Services No. 5 Limited, and the Co-op Bank lost the judicial review, so the FOS will be able to assess the fairness of those interest rate increases. And also it's clear that when it first took over the Whistletree book, Whistletree mortgages, TSB kind of discriminated against mortgage prisoners, and this should mean that some Whistletree customers will be entitled to redress, although exactly how this will work is of course yet to be determined. And of course, if you've not already tried to do so, and I know most of you have, please try and switch lender and let us know about your experience and why you were turned down. So of course, thank you very much for listening, and of course sharing your stories, and please contact your MP as soon as possible and ask them to sign the APPG's letter. I mean, I can cover a few of the questions that have already been asked. I mean, in terms of what price was achieved for the mortgages, we've got quite good data on how much the Cerberus mortgages went for, and they went for about the kind of fair value of them. So I think it was 100 pence on the pound. Then of course the way Cerberus bought the mortgages through a complex series of companies, and then the money from those mortgages kind of flows offshore via the Netherlands to the Cayman Islands eventually, and into the Cerberus funds. I think on terms of the consumer duty, it is being introduced, but the FCA has already delayed it for mortgage prisoners because it's going to apply to new products from 2023, but existing products it's only going to apply from 2024. So it's already been delayed for mortgage prisoners. And of course, because it's actually quite vague responsibilities, it's not clear exactly how it will work. So firms will have to demonstrate they're giving people fair value, but of course exactly how that's determined will be up to the individual firms and then the FCA approach it decides to take. And again, in terms of the we know that Northern Rock never passed on the cuts, and even the cut after the Brexit referendum wasn't passed on in full by Landmark. But of course, it depends exactly what the contract says. And we know that I think there has been some confusion about whether Landmark that bought the mortgages for Cerberus has a lending license. I mean, I think for several years they were telling people they didn't have a lending license. I think then it was found out that actually they did have a lending license, but of course the fact that they have a lending license doesn't give them any compulsion to actually use it. So I think the FOS said in one of the complaint adjudications that I've seen that Landmark had been telling the person they didn't have a lending license, but actually Landmark did have a lending license, but it didn't actually have to do anything with that license to offer people new deals or fixed rates. Support for mortgage interest, this has been a long-standing problem, particularly that I think entitlement was changed to a loan, and also it's kind of more based on an average rate in the market in terms of how much you get. And of course, as we all know, mortgage prisoners are paying interest rates that are far above average. Of course, it's always important to talk to your lender and tell them your situation, and then if they don't then provide you with any help, then I'd encourage you to go to FOS and also share your experience with the APPG and report it to the FCA, because it's not surprising that many people who do tell their stories to the lenders, then they don't get offered any help, or they're just told, well, you can stop paying, but then you're going to arrears and have to pay extra back eventually. So yeah, I think I've covered some of the questions, but yeah, I'm always here. Rachel's got my number and my email address and kind of passes on a few cases, and I'm always sort of happy to help. Thanks.
Dominic, thank you very, very much indeed. Thank you. If anybody has any questions for Dominic, then please make us aware of that in the chat, and we'll get that conversation happening shortly. Dominic, thank you very, very, very much indeed. We're going to go to Gerk. Gerk, please introduce yourself and share your thought. Thank you. If you can take yourself off.
And everybody else. Gert Samra, I'm a mortgage prisoner. I've been for a long time. Not because I'm on a high rate or anything, but just because of the conduct of Halifax Bank of Scotland promoting mortgage with payment holidays, and then when you take a payment holiday, they mark your credit file as missed payments. And therefore, all of a sudden, your credit cards are gone. You can't move your mortgage because you've got history of 18 months in arrears, even though if you look at the payment history, you can see that all the payments were made. That point was taken to the FOS, and nothing meaningful came out of that. Then a few years later, I had another incident where I needed to do something, and again, the lender insisted that I had to go in and sign away a facility which they said that they'd withdrawn several years before. So on the one hand, they've said that I can't use that facility, but if I want to transfer a bit of land from my property, then they'll agree to do that so long as I sign away my rights to that facility. So how can you give something that you haven't got? So anyway, that's where I am there. But I've spent a lot of time looking into what went on with the Northern Rock sales and everything. And so Dominic's covered some of the points. But when Dominic, when you say that that Cerberus paid, par value for the mortgages, I disagree with that completely. If you have a look at their accounts, this is the NRAM accounts, etc. They devalued the asset holding from something like 86 billion down to 16 billion, and then that's the par value that Cerberus have paid. But there's no explanation as to where that value disappeared off to. But that's something you might want to have a look at, Dominic. As I say, there was a big difference there. I had a loan with Clydesdale Bank, which was sold to Cerberus through a different section of it, so it's a commercial borrowing. But the Clydesdale Bank did a similar thing there. They heavily discounted the value of the assets, and then they sold them on. So it looks, well, I've been advised by somebody who's a very, very well qualified accounting person, and he said that basically it's an illegal sale. Basically, when the loans have been sold, they've been sold at an undervalue, which has been hidden from the shareholders, etc. And the example he gave was that if you have, say, £100,000 mortgage, okay, and it's secured against a £200,000 house, okay, you've got a 50% loan to value, yeah, right. So they then say, well, that person can't afford to pay their mortgage properly anymore, so the loan's devalued now, so now it's only worth 50%. Okay, and then they'll go and sell it for 60%. So they'll show the shareholders that they've made a 10% increase on the value, but it's because they've devalued it down to 50 and then sold it at 60. So that's the sort of things that goes on. The reason why nobody's doing anything about this is because the Treasury people are very heavily involved in all of this. Right. If you look at what happened with Northern Rock and the asset management, and this has been mentioned previously by people, that the interest rates went up while everything was held by Northern Rock asset management, didn't they? Everybody's mortgages, people who were on a standard variable rate, their mortgage rates increased, but the base rate didn't increase. So there's no basis for them to do that, other than the fact that they felt like it.
Thank you, Gert. Thank you very much indeed for sharing those thoughts. And you've raised several things that really ought to be followed up properly. In the interest of time, we're going to have to move on, Gert, but thank you very much indeed. I'd like you all to hear briefly from Samir. I've only known Samir for about a week and a half, but I really am glad that I know him. Samir, could you very, very briefly introduce yourself and tell everybody what you do and any reflections you have on what's been covered so far tonight, Samir? Thank you.
Hello. Hi, everyone. I am. Can you hear me properly and see me?
Yeah.
Such a heartbreaking stories. I'm just a filmmaker, you know. I made some films in the past and award winnings, and the latest one was the one we did was called Spunk the Bunker. Also, in a TV version, was shown as the Banksters, and it was very similar, heartbreaking stories of small and medium-sized enterprises who, you know, in a large scale, around 30,000 businesses were ripped off by the banks. And what I find here is a similarity of misconduct and the lack of regulation and lack of scrupulous, where they went for the guts, actually, for the assets of the taxpayers, you know, the people, you know, who bailed out the banks once upon a time, not long ago. And looks like coinciding with that was happening this in the backstage. And unfortunately, by the comments and what you said, you know, people are suffering, and I'm very saddened that your stories are very similar with those victims. This film will be shared on the website as of tomorrow, Transparency Task Force, and I'm hoping with Andy that we will go forward to make some film about these issues and look for some good stories. And I feel really humbled. I mean, you know, when you deal, I mean, I have mortgage, you know, I mean, I'm British now, adopted Brit from Bosnia. I won a BAFTA. And, I mean, for me, justice and truth is the what we are seeking. And I think film might not be able to change everything, but it can point to the issues. And I think some of the stories are too powerful for British media to reveal. Actually, you know, on our film, BBC said that film has wrong tone. And I'm sorry to say, because after UK cinema screenings that were well visited and publicized, with Noel Edmonds being part of the film as well, who then got bailed out from Lloyds Bank, and it went before the war in Ukraine, went on Russia Today, because that was the only, you know, when you can't tell truth in your land, and you go to enemy lines to tell the truth, and I don't feel embarrassed about it.
Samir, thank you so much. Thank you so much. It would be wonderful to have your creative capabilities let loose on this topic and other topics like it. It really would. Thanks, Samir. Thank you very much. Brilliant that you're here. Can we please hear from Neville Heron? Neville, can you take yourself off mute and introduce yourself, sir? And as succinctly as you can, share with us what you'd like to say, sir. Thank you.
Right. Hiya. Hello, everybody, and thank you for putting this on, and hello, Rachel. A lot of what I was going to say has actually already been said. One thing that I will say is that when I took out my mortgage with Northern Rock, I had a desktop affordability test, which was totally wrong when I found out from my SAR. And so was the valuation, which created two loans attached to the loan. So it ended up being a repayment together loan. So I had two loans at a higher rate attached to the mortgage. Many years later, when I actually had it valued several times, it was valued at 3 or 4 times the amount what they valued it at. Anyway, that's another story. In 2008 and the financial crash, I'd already been asking the question, when inflation starts getting high, the remedy from the Bank of England, and our friend Andrew Bailey with his past, he puts up the rates, but it only affects mostly the people of the less well-off people who have mortgages and loans, and they're paying through the nose for that reason for the same product. Yet the people who don't have mortgages and loans, or the better off people, carry on spending and carry on with no effect at all. So it's actually discriminating against part of the communities and part of the population of Britain to get us out of the inflation. I don't know if that makes sense. It's very difficult to explain. Yeah. So that puts us up already on the back foot. That means that the less well off with mortgages and loans, when inflation changes because of whatever happens in the country, whatever reason it is, they pay the most money. Then when you come to mortgage prisoners, we get an additional thing where we're sold on to different people. Mine was Northern Rock, went to NRAM, and then went to TSB Whistletree. and up went the rates, and it kept going up and up until we were paying many more percentage above the base rate and above everybody else on the market rate. Everybody who has a mortgage now, whether they're a mortgage prisoner or not, really should be getting behind a rate cap. We really need a rate cap, so it can only go up a certain amount above the Bank of England rate. It doesn't matter whether you're a mortgage prisoner, whoever has a mortgage should be interested in this, and they should be lobbying the MPs that went against the rate cap when it was last in the House of Commons. That's my opinion. It makes me very angry the way that we're all being treated, and there's going to be a lot more mortgage prisoners next year. There's something like about 1.8 million are going to come to the end of the fixed rate. They're going to be on percentages similar to what we're on now, and possibly more. So there's going to be a lot of repossessions and a lot of mental health and a lot of problems.
Thank you, Neville. Thank you very much. I think sadly you are absolutely spot on there. Thank you, Neville. Thank you very much. Folks, what I'm going to do now is I'm going to reinforce something that Samir said earlier, and also reinforce something that was spoken about by Dominic, this idea of basically this idea of writing to your MPs. So I'm going to share my screen if I can. I'd like to do that. Share screen. Here we go. So this is a page on our website, the Transparency Taskforce website. Some of you may have seen a panorama programme that was aired in August about a scandal called Blackmore Bond. Basically, the FCA stuffed up, loads of people lost money, etc., same old story. And we wanted to turn the publicity from the programme into campaign activity. So we made this web page, we organised some letters. There were 3 choices, one for victims of Blackmore Bond, one for victims of other investment scam, one for everybody else. The reason I'm mentioning it is because Dominic's idea is exactly what now needs to happen. There should be quite literally hundreds of letters going to MPs about the mortgage prisoner situation and building pressure for them to act. That's very important. Our little campaign has generated, I think, about 400 letters to MPs, and the numbers going up and up and up and all the time. And you guys are a much bigger community than the Transparency Task Force. We should really be flooding Parliament with letters of complaint and frankly frustration, annoyance and anger from mortgage prisoners. So the ask is this: tomorrow, when we tell you about where to get the letter, how to edit it and how to send it in and where to send it, etc., make sure not only that you do it, but you plaster it all over social media, and you get all your friends and family to do the same thing, because this is a battle that's only going to be won with numbers. Yeah, we've got to be like ants here. We've got to be like an army of ants, and all these letters are going to make a difference. So that's an important point. Do what Dominic was speaking about earlier. Now, if Samir were to do a documentary about mortgage prisoners, if he was to choose to do that, then that would create another wonderful opportunity to to really kind of accentuate the publicity about this problem. This is a political issue. This is a political issue, and I'm going to play you something from a podcast that I found remarkably interesting. I'm going to play you about 6 minutes of it. I think I can still find it. I hope I can. Where are you? Where are you? Here it is. I'm going to share my screen. Please allow me to make it crystal clear that I have absolutely no criticism whatsoever about the podcast itself or the people behind it. A lovely lady called Lucy McNulty, who used to be a journalist, a senior journalist. I can't remember which paper, but she's a very competent professional journalist. And she makes this podcast series called Following the Rules. It's all about financial regulation and that kind of thing, okay? So as I say, it's a really good podcast series. I encourage you to to subscribe and listen to it. I need to make sure I share my screen properly and I turn the sound on, otherwise you won't hear it. Now, she recently did a podcast with John Glenn, a name that's come up several times. I'm not going to say we have any particular personal issue with John Glenn. That's not my point. It really isn't my point. But when you hear what John Glenn says, I think we're getting to the heart of the matter. And the heart of the matter is that our government and our democracy is so massively influenced by the banks and the financial sector that they have more power and more influence than they should have. And if you don't believe that now, listen to what I'm about to play you. There's about 5 or 6 minutes of this. We'll be wrapping up at roughly 20 to 8, folks, okay? But please do listen to this, and I'll make the link to this page available through the chat and through the emails we send out tomorrow. And the one you're looking for is this one here, you know, the one that says former city minister. That's the one. I hope this works. He's basically at the end of the interview talking about his thoughts and plans now that he'd stepped down from being the city minister. Of course, he's back in the government now, but this is before that happened. He's talking about his kind of reflections in his role as city minister. And there's a couple of things he says that I found quite interesting. Let me use that word, interesting.
What people expect of us, and I was very conscious of that responsibility. But I have to say, the quality of the advice, the professionalism of the individuals who I worked with was really remarkable. And I think the biggest regret I have is that I won't have such interaction on a day-to-day basis with such high-quality Treasury officials who lots of headlines are generated about, but my experience was they were very responsive to what I wanted to do and were very keen to deliver on the agenda that I set, and very much were committed to.
So that's the first thing, okay? So I think he just said the Treasury officials were very responsive to what I wanted to do. Now bear that in mind in relation to what we hear later. I'm going to go over those words again. It may not be word perfect, but I think he said something like the Treasury officials were highly competent, capable people, responsive to what I wanted to do. Bear that in mind, okay?
Service, and that was the dominant sentiment I felt that existed.
You've obviously acquired a huge volume of knowledge on financial services rules and regulations. How do you plan to put that to use now? What are the next steps for you?
Well, leaving ministerial office has been quite an experience. I didn't do it lightly, and to some extent there's a sense of recalibration now. My primary obligation and desire is to serve the people of Salisbury, who elected me several times, but I should be thinking about how I can usefully contribute to life in Parliament, be it through scrutiny, be it through... One of the things I think I'm quite interested in is to try and deepen the pool of understanding of financial services. I think it would be healthy for there to be an opportunity, if you like, for MPs and peers to have seminars on what goes on in financial services, because I often feel that there is a bit of a gap sometimes. There's obviously people on the Treasury Select Committee, but it would be good to deepen awareness of how important financial services and the city is to our national life, and try and debunk some of the myths. So we'll see if I can get something going in that regard.
So that's the second thing I found very interesting. He's talking about the idea of seminars to educate parliamentarians on financial services and to debunk some of the myths. If you were a little bit cynical, you could see how those seminars for parliamentarians could be used to encourage the people that we elect into power to see things in a particular way. That made me a little bit concerned about the idea that the massively powerful banking and City of London industry needs a bit more help, let me put it that way, by way of seminars for politicians to help them understand more about the financial industry and to debunk some of the myths. That was a second thing I found quite interesting.
But I have deep interest in foreign policy. I was on the Defence Committee earlier in my career. I did a Masters in International Security and Strategy at King's when I was an MP. Obviously, there's a lot going on in the world of defence and foreign policy. But I think financial services will be something that I shall follow very carefully and give as much support as I can to the government in the months and years ahead.
Would you consider a move out of politics and into the city? Because I'm sure there's a long line of financial services firms that would be willing to hire you right now.
Well, I'm privileged to be a Member of Parliament. I think it's one of the greatest jobs that you can do. I never say no to anything, but I'm certainly not seeking alternative employment. It would be for the people of Salisbury to decide whether they want me to continue as their Member of Parliament, but I believe that my primary focus will be here serving the people of Salisbury, but also serving the government that I'm blessed to be working under now.
What would be your ideal city job if you were to consider that?
I've never really thought about it. I'm a politician. My job was to serve the city in Parliament, and I think that...
Did you hear those words? My job was to serve the city in Parliament. My job was to serve the city in Parliament. So John Glenn, I believe, is saying that he saw his role as City Minister being about serving the city in Parliament. I didn't hear anything there about consumers or society. And earlier he said, I think I'm getting the words exactly right here, the Treasury were very, very responsive to what I wanted to do. And his role is about serving the city in Parliament. Is it just me, or does that sound like too much power and too much influence?
From people who've done this job in the past, and Mark Hoban did the job, I think 2010 to 12. He left Parliament in 2015 and has a number of roles. That's not on my agenda at the moment. It's only been a few months since I left office. Obviously, I've got things to think about, but what we need is more people in Parliament who understand financial services and can be advocates for their interests.
What we need is more people in Parliament who understand financial services and can be advocates for their interests. There's already 100 times too much influence on society via Parliament, by the financial services sector, I would argue.
In a suitable and thoughtful way, and I hope I can, as I say, make that contribution from a different vantage point than I've had within the Treasury.
So maybe it's something to ask you again in a few years' time.
We'll see.
Okay. Well, thank you very much. That's been an incredibly informative conversation. We've covered a lot of ground, and it's been especially interesting to hear your views without your ministerial hat on. So thank you very much for your time today.
Well, I don't have anyone looking over my shoulder, so I can really open up, which is a rare opportunity. Thank you very much. It's been great to go over what has been a very exciting and interesting period of my life and as Economic Secretary and City Minister in Her Majesty's Treasury.
You've been listening to Following the Rules with Lucy McNulty.
I'll put a link to that webpage in the chat. My point, ladies and gentlemen, is this. Earlier, I showed you the data from Violation Tracker showing that the financial services sector is fined more than any other industry, despite the fact that it's an industry that relies on being trustworthy. It clearly isn't trustworthy. And I also showed you data that makes it very clear that the same organisations are committing the same kind of offences over and over again. And the regulatory framework that we have, its response to that is to fine the companies, in other words, to fine the shareholders of those companies. And there really has been remarkably little use of the senior manager certification regime, which was brought about to try to make individuals more accountable. The level of individual accountability in the system is woefully lacking. And there I played you a few minutes of a podcast that, to my mind, suggests that at least that particular city minister saw his role as looking after the interests of the city in Parliament. And frankly, wanting even more opportunity to educate, or perhaps I should use the phrase, influence the thinking of parliamentarians. I think the mortgage prisoners problem is a political one. There is not the political will to solve the problem. The problem is very, very fixable. Where there's a will, there's a way. It hasn't been fixed so far because the political will isn't there. And I sadly think that every intelligent argument that's put forward as to how and why things should be different and things should change and mortgage prisoners should be looked after fairly, I sadly think that every intelligent argument that is proposed that's built on the notion of fairness and decency is going to fail all the time. The people with the power don't have your interests at heart and are more interested in the overall welfare and well-being of the financial services sector. I could speak for ages about that line of thought. I genuinely do not mean that in any rude way against any particular individual. I haven't got any particular issue with John Glenn myself whatsoever. But having heard what he said in that podcast, it really helped me understand that it would appear he saw his role as Economic Secretary to the Treasury to look after the City of London. And I would say that the only thing that's going to look after the City of London is if the City of London starts looking after society. That's my point. Rachel, I'm going to go to you for any sort of final reflections, and then we'll start winding things up and bringing things to a close. Rachel, your thoughts, please. Thank you.
Yeah, well, I think so many people have chipped in tonight and touched on so many things that I probably would have brought up again. What I will say is that as you all know, we are a very, very small team of people that continue to try and help you all, and genuinely on a daily basis we hear your stories, we get your emails, your letters, your pleas for help, and we do our utmost every day to try and help each individual. Even if it's still going at 10 o'clock at night, we are still working to try and achieve something for that person that's come to us. I'm not diplomatic enough to sit here and be kind about John Glenn, I'm afraid, because I have huge issue with him and he knows my feelings about him. But unfortunately, because he's had an opportunity to make many lives better, and he has chosen the city over people's welfare. So what I will ask of everybody that's in the group that's on this tonight is help us to help you, and the only way we can do that is if you do. I know it's boring banging that drum on your MP's door, but don't just do it yourself. Get family members to do it. Send those letters. Complain to FOS. Ask Landmark why they've got a lending license and yet they won't give you another product. Ask all those questions and keep on keeping on. We continue, the four admin that work on a daily basis. We've all also got huge health problems, etc. But we are here and we will continue to be here, but we just need so much support, you know, in the way that, not through finances, etc., from yourselves, but we need you to be, you know, supportive so we can get these types of amendments through Parliament, which in turn will then help mortgage prisoners, because it's an absolute shambles. The government's a shambles. They're an absolute disgrace that it's now 12, 13, nearly 14 years down the line, and we're still sat here 4 years down the line from the Panorama programme that created the mortgage prisoner issue into the light, and yet we are still getting the same ridiculous copy and paste letters now from Andrew Griffiths that he's now copy and pasted from John Glenn. Tomorrow morning I will share the newest Andrew Griffiths letter, which will all have your blood boiling again. It's just absolutely pathetic. And I will also share Dominic's letter that you can then all go on to share if you've not managed to get it through the chat here tonight. But like I say, if people are in distress, it is really distressing to hear some of the stories that you've told us tonight. But those people that are seriously in distress, if you think that we can help in any way by talking to them, lenders, Helidor, Landmark, do please fill out a can we help form, because we will speak to them and we will try and help you.
Rachel, thank you. I think Rachel's message is absolutely spot on. All right. I think every one of you, every single mortgage prisoner, become a campaigner, become an activist. You may well be part of UK mortgage prisoners already as a group, but actually go one big step. Turn yourselves, if you're not already, into one of the army that Rachel's building to try to get justice by doing things, campaigning. You know, we did a rally last year at TTF. It worked really well. Maybe we can march on London. I think it was May, we marched on the Treasury, Downing Street and the Houses of Parliament. Maybe we could do a rally next year, Rachel. We'd love to do that with you. You know, you guys should be flooding your MPs with letters. You are absolutely right to be kicking up. You are being treated unfairly. It isn't your fault what's happened. And there are individuals getting in the way of the justice that you all deserve. So please become as active a participant in this campaign for change as you possibly can. I'm going to invite anybody that wants to just chip in with any final words to do so, but keep it very, very brief if there is. Just wave a hand at me if you want to say something, okay? Otherwise, we'll bring the session to a close. Wave a hand if you want to. I think everyone wants their tea, quite understandably. Can I please invite you to put your hands together and quite literally applaud the work of Rachel and Janice and Gwendolyn and all the others in the team. You know, we're pretty heavy-duty campaigners at the Transparency Task Force, and I genuinely look up to the work that's been done by Rachel and the team. You're absolutely awesome. You really, really are. Thank you very, very much. Well done, everyone. Let's keep at it together. Let's keep fighting. Let's never, ever give up. One of our members, Paul Carlier, put a thought for the day in the TTF newsletter the other week. He said, two rules in life. Number one, don't give up. Number two, don't forget rule number one. That to me sums it all up. Good night, folks. Have a good rest of your evening and don't give up. Keep hope and keep fighting. Thank you. Good night. Good night. Well, I do hope you found that video useful and informative in some way. Please do remember, if you haven't already done so, become either a subscription member or make a donation. Both of the links you need are coming up on your screen now. And they're also in the video description. Thanks again. Thank you.